Welcome to Tbilisi. I'm glad the weather here is pretty nice. It's much nicer than the other places. Um, so I wanted to. So we have a presentation, right? I don't see it. Alexander, did we have a presentation? So I want to talk a little bit about the results of the previous year. Um, I think it was in general one of very successful years. It was maybe a little bit easier than 2 years ago and 3 years ago when we had to go through some very dramatic changes. As you remember, 2 or 3 years ago we were having a lot of crisis. We had generally geopolitical situation changed. And we had to relocate a lot of people. Also, we were going through some acquisitions, and we just acquired Cupid Media, and it was a big financial investment for us. It was also, yeah, there's no presentation. Can I see it? No, I can't see it here. Okay, well, I can generally talk looking backwards, but so it was pretty difficult 2 years ago. And then we had some important financial investments in Cupid Media. We were also trying to integrate, start integration with Cupid Media. Last year overall, it was a lot smoother, less geopolitical changes, I guess, and we did very, very well. So we've experienced significant growth in revenue. Specifically because we managed to benefit from our mergers before. We learned how to share traffic, how to share customers, and increase their LTV. We also were increasing a lot our team. So HR did a really good job, and I will talk about it a little bit more specific. We've increased the headcount significantly, so we're hiring. It's actually very nice because last year, a lot of tech giants were firing, and we were hiring. So this is a good sign. We integrated Cupid Media, as I said, and we also succeeded greatly in corporate governance and accounting. I understand that it's probably not relevant to everybody, but for a company as a whole, it's a very big process. We were audited. So last year we've completed the first set of the year before we completed the first our official PCAOB audit, and this year we have actually completed another year of official audit. So the company is in principle IPO graded. So we have audits from a very reputable firm that states that our revenues and profits and our corporate governance is in line with the highest standards applicable to the IPO graded companies. So, whoops, it's so the revenue. So as you can see, we are growing in terms of revenue. Last year, the 2023, we've achieved more than $400 million. And in 2024, we have an estimate of reaching more than $500 million in revenues. So I'd like to applaud to this. This is amazing. And you can see that EBITDA is also growing. We had a little bit, somewhat of a dip in 2022. As I remember, I told you we had some general, geopolitical issues, and we were investing heavily in relocation. So we had a dip in EBITDA, but generally we are growing pretty nice in both revenue and EBITDA. The slide. So something I want to share with pride is that our stock is growing significantly, and some of the people who are getting stock as the part of their benefits and motivation package are experiencing amazing returns. Nothing like that. I haven't seen, I mean, no stock on the market behaves like that. So it's good. Of course, this is our internal valuation. So it's because we're not on the stock exchange. This is not, an official price, but employees who own the stock, they have the right to sell the stock at this with this return on investment. So this is a very good return for people who are getting these stock options. So we buy them back. In terms of number of users, we have 62 million number of new users. Imagine how much marketing is working. We have unbelievable amount of messages sent through the system. It's almost 1.5 billion more than the last year. It's 27 billion messages our users exchange between each other. We have 13 and a half more new connections, meaning more couples who get together on the website and start talking to each other. That's an amazing number. It's also increased. And we have about 60 million meaningful connections. Meaningful connections means that it's a long conversations going on online. So people are actually talking to each other, not just saying, hi, let's meet, but somebody, these are the couples that are talking to each other more or less often. So these are additional numbers. Of course the number that makes me very impressed every time is the number of messages that contain the word love. I started looking at the statistics last year, but this year it's amazing. I can't really. What is it? It's 1,200,000,000. That's an amazing number. So we are giving people the sense that they're being loved, and they also give them the opportunity to share love with each other. So I think it's great. We also have other means of expression, and people are exchanging a lot of videos. People are exchanging a lot of photos, and they're sharing a lot of gifts. And they're also physical deliveries of flowers. We're happy that the people are expressing their love in all these different means. Now, as to some of our business metrics and KPIs, we had a decrease in LTV. So we had an LTV of 540. We have a LTV of $540 per customer. This is not a very upsetting number because we've combined now the business with Cupid Media. It affected significantly our LTV. The LTV of customers on Cupid Media was historically much lower. So combining these two numbers affected into making our overall LTV lower. But without the Cupid Media, we increased the LTV by $37. So actually, this is good statistics. So the average lifetime of our customers grew 1 month more. That means, well, basically, as the company ages, this number is usually going up if everything is good. So generally, people are staying with us 32 months. This is amazing. I think for most dating apps, this is an unbelievable number. And we have 400,000 people who use our products for more than a year. So we are maintaining business, as you know, and growing the core business, but we also launching the new products. And our strategy was to launch a few products every year and close a few projects every year. As you know, probably, not from the startups, not very many companies survive. In fact, from 27 companies, usually 26 die. So it's a pretty high death rate in general in the markets for startups. But you will see that some of our startups are doing much better than the average. than the average statistics. So we have currently 13 products in the lab. And we have made over the last year an investment of about $10 million. It's higher than the previous year. And these are the products that are in the lab. Some of them are in the growth section. So Mill, for instance, is in the growth section. Eva and Noda and Once are in the growth section of our lab. Some other products are new and are in the startup mode. So Fleur, Bam Bam, Raw, Wildly, Magnet, Tubit, Sparks. These are the startups that we were working on last year. So the new products that we launched last year, Astri Raw, Fleur, Kiseki, and Sparks. We'll talk about them and hear their presentation. But generally, as you see, we've been active in launching new products. Some of you may have heard of Fleur before. I think we started early 2022. But Fleur is the sex positive dating app. Sex positive means people are happy to talk about sex in the first conversation. That's what we define as sex positive, and people who are not shy to talk about these and who indicate in their profile that sex is important for them. So this is our product for this market. Raw is a great product about authentic dating. We all know that people are trying to show the best of themselves in Instagram and sometimes in Tinder, so that creates a problem. So some people are getting confused. They don't understand that they're meeting that particular person. Sometimes the photos are outdated. So we try to solve this problem by address this problem by starting an app that is very very accurate in showing the person and the person's life. So you take every day you're supposed to take a photo, and it takes a double photo. It takes the photo from the front camera and from the back camera, and you can see the person as he or she is now, and also you can see what he or she is doing at the moment. So this is an interesting concept. Of course, you may have heard of Be Real, the social network with the same concept, but I think for dating this works even better. So Sparks, Sparks is our coin project. We are also trying to join the blockchain revolution, the blockchain changes, and use that technology to help our customers make the payments and also help our partners to make additional money with the proprietary coin. Astri is our product for coaching, and I'm sure you will also hear some presentation. It's a new market. It's not exactly dating anymore. So we're looking at some adjacent niches where we can use social discovery, but not for dating, but for other purposes. And Kiseki is our tap into Japanese market. We try to use our core product and adapt it to the new market, Japan. I think it is an amazing market for Match.com and for Match Group. It's actually the second largest market after US. So we want to go into this market. It's actually very difficult and different market, but it seems like our product may be very relevant to them. So we closed some projects this year. It was Tubit, Wildly, and Bam Bam. So Tubit has been merged with the video services. Well, I have mixed feelings about it. So we were fighting a lot for Tubit. We've actually we're really optimistic about Tubit because video streaming is a big business, and actually we thought that our audience is very relevant to video streaming. Unfortunately, it wasn't working that well. We've learned that streaming, the video technology that is employed in streaming, is much more complex, and the quality in order to guarantee a certain level of quality of service, you need to have a very, very high-end development. And also the introduction of streaming and TikTok really changed the market very much. I mean, TikTok introducing streaming really, you know, made the competition extremely fierce. So it was really hard for us to build streaming as a standalone product. So we kept streaming, and the streaming is going to work within our products, but without a separate brand. So we closed wildly. It was a short story. I think it didn't go much further beyond the presentation, so it's not really was talking long about it. We just explored the idea, thought it was interesting, but then didn't really invest into it. And we closed Bam Bam. So chat roulettes. We've also thought it was an interesting opportunity for us, because we had video streamers, we had people who were willing to stream users. However, chat roulette is a pretty volatile business. It's on the edge between adult entertainment, social discovery, and dating. For us, we were trying to be away from the adult entertainment. But it was in this way, it was really hard to compete, because I think some of the most successful chat roulettes have adult component to it. Mostly, it was one exception of a very successful chat roulette that was bought by Match.com. But I mean, this is I think it was a very successful product, and for us it was difficult to compete. It just didn't go for us very well. Now, we continued to make our company more international. So as I mentioned, we relocated a lot of people after the war between Russia and Ukraine. And this year, we've tried to help people who are away from their original home. We tried to help them to adapt to new places. And we hear a lot that there's the wave, of people going back sometimes, because it's indeed, being immigrant is not easy. And as we talked last year on the summit, it seems like we are generally, SDG is a company of immigrants. So we try to help the immigrants to feel better, and I think this year we managed to do that. We measured we made surveys concerning people's satisfaction with their new location, and I think it's going up. So it was 6.5 at the beginning, on the second half of 22, and now it's 7.2. So this is the map of where our employees are located. It's amazing. They're located all over the world. We don't have anybody on the North Pole, so we have a vacancy now. So if somebody wants to put a strawberry on the top and also on the bottom, you're welcome. We will give you a backpack and maybe some food. So, but yeah, generally the plan is to cover the whole Earth with the strawberries, SDG strawberries. But anyways, you see how our company is spread, and it's amazing. I think 5 years ago, something like that wouldn't be imaginable. Before COVID, people would think, oh, that company can't really work, or it must be like a huge company. It's only 1,100 of us, and we cover most of the land. A lot of newcomers, as I mentioned. We have 300 more people joining our team this year, and I have to say that our HR is doing an amazing job in hiring. As I said, this year it was maybe a little bit easier in general, because a lot of tech giants were firing, but overall we did a great job attracting talent. So we have a lot of new people globally, and we have 81 promotion. So also more promotions this year than the previous year. This means people are getting more responsibility, more control, and hopefully a little bit more money as well. So people are promoted to new roles. Some of them are getting the CPO roles, which is a great role as well. Yeah, this is the number. I had a feeling that we had 1,100, but we have 1,037 here. Okay, so we will get to 1,100 soon. But you can see the growth rate is pretty significant. So we are investing in resources. We are not firing talent. And we have, I think this year we've made a significant input, significant investment in the recognition and reputation of the company. As I said, internally, we went through an audit. This makes us a lot more reputable in the eyes of banks and partners. But also we've presented ourselves at several conferences, several major conferences. One of them was TechCrunch, and we had a major presentation on the TechCrunch, and we talked about AI and social discovery. And this presentation actually was considered one of the best and one of the most interesting at TechCrunch. And also, I presented, Tony presented, KJ presented at different conferences. So we have made a significant dent into the recognition of Social Discovery Group. Now, that is strange. Yes. So now about the future. So one of the major changes, I think, global change that I want to make in general is to make our company even more tech company. So in some way, we always been a tech company, but we were using what I can call a low tech. The major services that we provide are not specifically high-end technology. Chats, sending messages, even letters and exchanging gifts is more or less a recognized technology that is being used in many areas. But now with the AI revolution, I think we can make our company really high tech, meaning that we will adopt technologies that only few companies adapt and that only few companies know how to do really well. So with AI, including with machine learning and natural language processing that we are trying to employ in our business, we will make it really high tech. And second big change is that we want to focus on profits rather than on revenues. So this year, as you can see, the growth of our revenue was significant, and we've pushed the revenue. So for the last 2 years, I think revenue was more of a focus, and this next year, I think we have to focus more on capturing value and on having profits. One of the reasons is that the markets has changed. I have to say that we were considering 2 years ago or 3 years ago IPO, and we started the process, but the prospective IPO now are probably less interesting for us. Well, generally the markets have gone down, and the valuation of the companies have been lower than usually. So we are not in the high valuations now. So it's not a good timing for IPO. And second, because of the geopolitical situation, I think still for us as being digital nomads mostly, the perception is not favorable. So we think that IPO, if we do IPO now or if we do IPO in the close future, it will be lower valuation with discount rates. So we don't want to take these, and it's not necessary for us. Companies go IPO because sometimes they're desperate. They have not enough income. They don't have profits, so they need to go IPO. For us, it's not necessary, so it's just some benefit if we want to do it. If we suddenly have a very good market and suddenly we have a really good opportunity to invest, then we can attract public capital. So IPO, we want to put this a little bit on the shelf and keep our opportunities open. But this is no longer a big priority. But we want to develop the company, as I said, focusing on profits, because generally now all the evaluations are based on profits, not on revenue. In the moments when the markets are volatile, companies are valued based on their profit, what they, the incoming cash flow. They're not valued on revenues alone. So this is something that we want to prioritize, even for IPO in future. We want to have high profits, and I have to say that at the moment the profit margin for our business is lower than the standard. So we need to lift this this KPI. So the projections for the next year are the following. So we want to make over $570 million. So as I said, more than $1 billion. It's symbolically very, very nice figure. So we want to increase our revenue still, and we want to significantly increase our profit to $60 million. We will make even more investments with SDG Lab. The estimation is $15 million. And we want to increase our expected income, which is another important metric that we use. Most of you are aware how it is calculated. The expected income to $172 million. This is the expected return from the customers that we plan to attract the next year. So these are the most these are the metrics that we want to hit the next year. I think they're very ambitious. I think they are very aspirational, and we want to work next year towards them. Thank you very much.